Hi, this is Daniel Kim. I'm here with Shaka Hawaii. I'm here with Nainoa Logan. What's going on, Nainoa?
Hey, what's up, Daniel? How you doing, man?
Good, good. So, hey, can you just tell the people here, the audience, what you do?
Yeah, so basically, I'm a trader, right? I've been trading in the markets for 18 years. I started out with reading charts, technical analysis, where most people are doing that. I did some fundamental analysis, and for the last 8 years, I do something called quantitative analysis, where we're using statistics and numbers to kind of just determine how to enter and exit my trades. So, yeah, I've been trading for about 18 years now, from stocks to forex to futures. Uh, I've been in and out of them all. So
And then, can you just tell the people, kind of, just so they know, you're a local of Hawaii, a
yeah,
native.
yeah. My background, so I'm born and raised in Laie, Haula, on the island of Oahu, where the Polynesian Culture Center is. That's usually our landmark, right? So that's the town that I'm from. I grew up there. My grandma and grandpa actually helped start the Hawaiian Village in the Polynesian Culture Center. My family goes like 9 generations deep in that town. And then in the last, let's say 3, 4 years, I moved to the Waianae Coast in Makaha specifically. So I went from the wet side of the island, the windward, to the hot and dry side of the island, of the leeward side. And yeah, I mean, I love my culture. I love my people, and my goal is to kind of help them to uh, to learn some of these financial concepts and stuff. So
So let's get into this real quick. So first question I have. So what we're doing today is I'm asking Naino a couple questions. We're just doing a high level just overview on some of the beginning, like how to get involved with trading on the stock market. And the reason I want to do this today is we had a major what people call a correction or a dip or whatever you might call it. And a lot of people that are starting to get into trading, they're probably freaking out right now. They have no idea. They're like, oh my gosh. So what I wanted to do was ask Naino, I was like, hey, can you do a quick course? I've been up since I actually didn't go to sleep. I stayed up till 3 or 4 o'clock at the beginning of the market because I was going to make some trades myself. And Nainoa has another class on selling puts and other things. Today, we're just going to go over some high level things, like just really, like, maybe not, I don't know if high level is the right word, but just an overview of maybe some things on the beginner side. Now, the first question I have, and I know, is this: how many people personally that trade that are local from Hawaii, and what's the problem here? Like, why are more people not like getting into it? And you're talking about GameStop, like it kind of triggered some stuff. But yeah, you want to share a little bit about what your vantage point of how many people are actually trading right now?
yeah, so there's not a lot. There's a lot more, again, like you said, from GameStop. A lot more people have been interested, and there's not a lot of people that are vocally open about saying, yeah, I'm a trader, because they'll usually start. Anybody that makes money was going to start letting people know, like, yeah, man, I've been doing this in the market and I'm a genius, right? But then what tends to happen is they get whacked in the market, kind of like today, right? And then you never hear from them again, right? So I think there's two major struggles. Struggle number one is our time zone, right? In Hawaii, the market opens at 3:30 a.m. or 4:30 a.m. depending on daylight savings time on the East Coast, right? So if you want to be like a day trader, or you want to get in on the market open where they feel like that's where the most activity is, I mean, you're up at 3 o'clock, 3:30, 2:30 if you're like one of those people that preps, and then 3:30 is when you start trading. So that's a tough gig for people to do day in and day out, right? The market closes at 10 to 11, so that's the perks, right? There's some people, some traders that I know, they'll trade the market open, and then the rest of the day they're surfing, right? If markets closed at 10, they don't got nothing to do. They're lounge tearing, they're at the beach cruising, and people are like, what do you do for a living, kind of thing. So that is one perk, but that's the main struggle, the time zone. The second struggle is there's not a lot of people that are teaching people how to do this, and so where are they getting the education? Most people were learning from people around us, but where did they learn it from? And there's just no seed. There's no original tree to start dropping knowledge. And so, those are probably the two main struggles. But introduction to cryptocurrency now, and there's a lot more people in crypto that I know of than there are in the stock market, because cryptocurrency and forex is 24 hours, right? So
So, I mean, basically from what I'm seeing too, is I see a major interest in actually like, some of the friends I have on the island, they're getting into crypto. Definitely you're right. Like you could trade 24 hours. I think the time difference is definitely interesting. And I just want to have a conversation because, at the end of the day, we want to give locals of Hawaii an opportunity to have resources and information on making good decisions and how to become more financially stable and not have to learn from just YouTube or like locals like yourself, you know what I mean? And I'm just excited to do this. So hey, what I want to do is just have a quick conversation. I'll just kind of throw a couple questions and maybe you can kind of we could riff back and forth. So hey, so real quickly, just kind of the fundamentals. So one, where do I get started with if I wanted to get started stock trading? I was talking to a friend yesterday. What are the easiest ways to get started, if I wanted to buy some stocks?
Well, so first thing, you need a broker, right? And these are retail brokers. So it can be anything from Robinhood, Webull, Tastyworks is a broker that I use, and Thinkorswim is another broker that I use. Those are probably my two personal favorites, right? Thinkorswim and Tastyworks. But you need a broker. Once you have a broker, they're going to be the intermediary between you and the other traders that exist out there, right? So every trader has a broker. So that's the first thing.
So at the very simple, like most people are going to probably use Robinhood and Webull. Those are probably the two most popular ones. You could trade on your mobile app. You could just go on there and really how it works, right? And I know like, you take your bank account, you sync it up, you transfer your funds, and then you're ready to go, right?
Yep, pretty much. It's as simple as that. When you get into the game that I'm teaching people into options, there's maybe one more extra level as far as your experience. Are you experienced? Have you traded? How long have you traded for? So you got to go through that one extra level of verification in order to get margin and option margin. But we can talk about that stuff later. But yeah, it's as simple as that. You connect your bank account, you fund it. For some brokers, it's like you open it up today and tomorrow you're ready to trade.
Awesome. And look, for me, I've been trading for a few years now. My dad traded and I got my son, he trades stocks now. He's got a Robinhood account. I say get him in early. The quicker you get in, the more you're going to understand the fundamentals of the stock market. I know it's really confusing, but I think the minute you start actually like buying stocks, you start understanding how these companies work, you're going to be like, hey, you know what? I could do this. I don't need to be a Wall Street genius. Like the money goes up, the money goes down, and you only lose money if you sell it when it's down, right? And then you make money only when you sell it when it's up. So really, it's almost like you're just holding your cash into these stocks, and you're hoping that if the market goes up, which generally it goes up over, every year. I mean, I don't know what the percentages are, I know, but maybe
yeah. I can throw that out. So typically, the market goes up 53% of the time, and the market goes down 47% of the time. Now, when I say market, we're talking about the broader market, the S&P 500 of the most important stocks, that kind of gauge the economy and stuff. And the reason why is the risk-free rate, now we're getting into economics and stuff like that, but there's a risk-free rate where people can just put their money into U.S. Treasuries. And in the U.S. Treasuries, the government is saying, you can leave your money with us, it's safe with us, and we'll give you a 3% return every year. And so because of that 3% return every year, well, for those that want more than a 3% return, they got to find someplace else and take risk. And one of the most highly used places to take risk is in the stock market. And that's why 53% of the time the stock market is going up, just because if not, it would be 50-50 up and down, but you got that little edge bias to the upside.
And so far, it's been a crazy bull run. So how many years has it been?
About 13 years. I mean, if you're going to look at March 9th lows in 2009, that ended during the financial crisis. March 9th, 2009 was the low of the market, and it's never looked back since. So even since then, it's gone straight up, with the exception of COVID that just happened, in 2020, March of 2020. What is that, an 11-year run? But you can't even count 2020 as a down year. That drop only lasted for 3 weeks. And then it came right back up. And so, stock prices lost 30 to 40%. Some lost a lot more. Like a lot of those that were in the tourism industry are still trying to recover. But the overall market, S&P, NASDAQ, Dow Jones, Russell 2000, even 2020 was in a down year. So technically, it's actually, what, 11, 12, a 12-year run, running on 13 years?
So just to give a paint an example, right? And I'm just going to use this one because like I actually bought some of this particular stock, but just for the newbies out there, Shopify, I didn't buy it at the low, but like, over the past 5 years, if you bought it in May 20th in 2016, you could have bought Shopify stock for $26, right?
Mm-hmm. Yeah.
So if you bought like 100 shares, that would be what,
yeah,
like $2,600, right?
Yeah, let me just see what Shopify is right now.
Well, Shopify is
It's
$1,083. So that would have been.
I don't even know if I can calculate that. What is that? 1,000, 2,000?
Yeah, it'd be $100,000, I believe. You from $1,000 investment, or not $1,000. If you made a $2,600 investment, you would make. I mean,
you basically $108,000.
Yeah. So, well, is 1,000? Yeah, 100, whatever that might be. So that just gives
about 100 shares. 100 shares times 1,080, $108,000.
Right. So, and the market isn't. That's not always an indication. You have winners and losers and stuff. But the reason I'm bringing this up, Nainoa, is the importance of diversifying a portfolio when you start, right? Because either one, you can get into like ETFs, or you could just get into blue chip stocks. You can get into what they would call FANG. These are like major stocks. Maybe can you explain that a little bit of what these terms are?
Okay. Well, let's start with the basics, right? You have stocks, right? That's the first thing what people are familiar with. And then you have a basket of stocks, meaning a bunch of stocks lumped up together. And those stocks are form kind of like a theme. So it can be, like we say, the S&P 500 or 500 stocks across all the different industries, the 28 different industries or even more sectors and stuff, to be able to determine, all right, this is the broader economy. But then you can have like oil stock, a basket of oil stocks. And so there's two vehicles that people use now. One is called the mutual fund. And the mutual fund is what a lot of retirement 401k stocks and stuff, 401ks use, IRAs. And it's basically somebody that puts all these stocks together, and you can buy a little piece of each single one. So instead of just buying Chevron, you got Chevron, ExxonMobil, Shell, BNP, Petrobras. All of those different companies all represent the oil industry or the gas industry. And so you get a little piece of each company instead of just one company. So like even if one of those companies tank, the other ones are still lifting it up, right? So you kind of minimize your risk. That's what a mutual fund is. And somebody's managing it, and you got to pay them a fee. Typically anywhere 1 to 5%.
That would be like Vanguard and
Fidelity, Morningstar. Those are the pretty popular ones in mutual funds.
If you want to go low risk and you just like, you don't know what you're doing, but you want to put your money, and if the market goes up, you can put your money in something like, what are the symbols?
To be honest, I don't even know. I'm not an advocate of mutual funds, but you can follow, just Google. Dave Ramsey is a big advocate of mutual funds and things that he does. They love Fidelity. A lot of people love Fidelity and Vanguard, but to be honest, I don't like them because you can do the same thing with something called ETFs, and that's an exchange traded fund. Now those I know because I trade those, right? Now what's the difference?
ETFs that you're
So USO is the United States Oil Fund. If I want to get involved with the S&P 500, which is if I want a piece of every single stock of the 500 stocks in the S&P 500, I can do the SPY, which is the ETF for the S&P 500. If I want to get a piece of every single tech stock in the NASDAQ 100 stocks, I can do QQQ. If you want to get involved with the Dow Jones, and Dow Jones is an old index. So the news loves to quote Dow Jones, but not a lot of traders trade Dow Jones. But the news loves it.
What for you? Like, if I was a beginner, you're recommending it to me. Give me like 3 picks that I just want to try it out?
Yeah, I mean, if you're gonna start with at least those two: S&P 500, SPY, and then QQQ, which is the Nasdaq. If you're an energy person, you can use USO. You know, that's the oil one. Let's see.
No, that's cool.
I
I just wanted a
Yeah,
couple. So
yeah,
here,
just
so
those work.
I think for this one, and I kind of want to wrap this one up, and we'll do a second course here
Yeah.
on maybe what happens in volatile markets and like strategy around that. But I have a question. So let's say I want to get started. Can you give me a couple stocks that might be good to start out? So like you were talking to me, like, hey, if I'm into video games, I'm a kid, get some Roblox, right? If I watch Netflix, like I think it's smart for people, and this is my opinion too. It's smart for people to buy stocks that they actually use and that they're interested in. Like if you're not interested in health industry, you might not want to get Clover Health. If you don't care about real estate, don't get, Open, or, don't get Redfin, you know what I'm saying? But if you are super passionate about space, then you might want to get Virgin Galactic, right? If you're super passionate about music, you might want to get Spotify. What are your thoughts on that?
No, yeah, you hit the nail on the head, Daniel. Like really, I mean, even Warren Buffett says that too, right? Invest in what you know, right? And that's probably the number one guiding principle in what to invest, because the true secret about trading and being an investor is you need to be engaged. Like you need to be exposed to it. Like you're not going to learn anything unless you start seeing it around you. So whatever you're exposed. So for example, like what he said, now there some of them can be expensive. Like I like Roblox. Roblox is cheap, less than $100. Roblox is nice, and they just came out, right? So that's a cool one. Like what you're saying, there's some blockchain technologies that are going for discounts right now. Mara, Mara, or Riot, Riot, right? If you're getting in, those will basically be a proxy for cryptocurrencies, right? If you love like Netflix and video streaming, right? Netflix, NFLX, but that can be like a $500 stock. Some of the cheaper ones, like Space Galactic, like SPCE is a good one, but really Electronic Arts, EA, what, $139. All of the FANG stocks, like you were mentioning earlier. So FANG is Facebook, Apple, Amazon, Netflix, and Google. Those are very popular, and those have been around. Now, what we do know that happens, there's always a disruption cycle. There's always the up and comer stock company. There's a bunch of companies that no longer, that aren't even traded anymore, in the top 20, like Intel and Dell. Yeah, they're around, but AT&T, so how long is Apple and Facebook and stuff are going to be around? Maybe another 10, 20 years, but will it be in the top 10? I can guarantee you in the next 20 years, there's going to be a few new companies out there that's going to replace them. So all of those companies that are coming out now that are cheap, I remember Facebook at $17 when they first came out. I mean, and now they're 300. So all
So
kinds of stocks.
I know the rule of thumb really, and like, again, this is my opinion, and, I think I would love for you to confirm it or not. You want to, it's kind of like, if the guys people are listening out there, it's kind of like fantasy football. You want to bet on the players that you think are going to perform, that's going to give you the points. And I played fantasy football for years. I won 4 championships in a row.
Wait. How many people did you play against?
Oh, we had 12 people, baby. It was hard. And my friends are good. But, one thing you realize, like, you do your analysis. You listen to certain analysts that you think are good. You do your research, and then they'll allow you to make better decisions. And I noticed that carried on to when I started trading stocks. I was like, look, which stocks do I believe are going to be around in 5 years, in 10 years, right? And one of the things for me, like I bought Square when it was low. I bought NVIDIA. I got what's it called, Facebook. I had Nike. So some of these stocks that I bought, this was like 8 years ago, and I remember thinking, are they going to be around in 5 years? Like I actually had Tesla and I sold it, and I shouldn't have, but the reality of it is I was like, yo, is Tesla going to take over all the cars? Are these electric cars going to be a big thing? And I think that was something that helped me in my processing and picking these stocks. Was like, it's not about what's hot now. It's like what Ashton Kutcher would say, right? Or he said this one, he's like, you don't skate to where the hockey puck is, you skate to where the hockey puck's going. And I feel like that's really what you're doing on stocks. You're like looking for, stocks, and you're looking for companies that you think are going to be really big in 5 to 10 years or still be around, correct?
Yeah, I mean that's why space stocks are a big thing right now, right? Because that's been a big thing happening lately. So artificial intelligence, AI stocks, right? Automated technology, virtual reality, 3D printing, all of those different new technologies that are at the edge, right? That are now becoming normalized. Those are the kinds of things where you're thinking, like you said, 5, 10 years, are they still going to be around, right? And real quick, let's come back to that, fantasy football kind of thing. When you get involved with fantasy football, you're more engaged. Like, there's people that only knew what team that they're dealing with, right? If you're not my hometown team, like if you're in your, California, if you're not Oakland Raiders or LA Raiders or whichever Raiders they are, or you're not really paying attention to any of the other teams. But because of fantasy football, you got one person in Detroit, you got one person in Green Bay. You're following all the games. Now you're more in tune with the overall NFL picture because you're following all of those. The stocks are the same way. That's a perfect example. Like, you might if you just buy one stock, I work for the company Hilton, or I work for a Norwegian Cruise Line or whatever. Most people, I only know my stock because that's all I follow. But if you buy a Netflix, if you buy a Best Buy, if you buy, a 3DDD or First Solar, if you're into green energies, now you're going to get a picture of the broader economy, and that puts you even more in tune with what's happening in the market. That's that engagement part. So you hit that I think sometimes people are trying to be perfectly right, and I want to squash that. It's not really about being perfectly right and knowing exactly when to get in. It's about just getting involved and getting engaged. And the more involved you get, the more engaged you get, the more in tune you get. And now your intuition starts kicking in. And that's where real traders start making money.
Interesting. Yeah, no, it's funny. When I first started doing fantasy football, I remember I was like, I don't know anyone's names. I wasn't following football. And then I was like, by the end of the season, I knew everybody. I was like, man, how do I know so many players?
Yeah, you could have been on ESPN, right? Because now you're following everybody.
Exactly. And one thing I think is good is like also when you're out there and you're at like, Target, or you shop at Amazon, or you shop, if you own some of these stocks, I know a friend of mine, he's like, I go to Disneyland all the time because he bought a ton of Disney stock. And he's like, so now you're spending money on the places that you own. Because if it goes up, you're owning a piece of that business. And secondly, if you are in tune with these companies, if something goes wrong or you hear good news or hear rumors and stuff, you could be like Disney when they acquired Marvel. You're like, oh, I heard they're going to, because you're into it. You hear this, you get the news a little bit sooner, then you can catch the wave. And, a lot of things, and we'll go into this next course about FUD, fear, uncertainty, doubt, and playing off of news and trends and stuff like that. Maybe that's the course after this. But, stocks really do play off of, information, news, and people's emotions on how they respond to different information out there, right? So buying stocks is pretty good in the sense that you get to learn about companies, you get to invest in the companies that you already are shopping at, and in general, like you're gonna increase your understanding of how the economy works in whole. And I think people of Hawaii should definitely do that, because that's just one step above where they're gonna be able to not only have a little bit more financial freedom, but they'll be able to speak more intelligently about like economy and just in general in life, being able to understand things a little bit better, right?
Yeah, no, you nailed it. That's exactly it. You're right.
And I know any last words as we wrap up this class, like, just for the beginners, any last things?
Yeah, again, like we've been talking about, just get started, just get engaged, right? Once you're in the market, you can learn the market. I think, just get started, and you don't have to take huge risks. You can start with one share, right? And then just kind of let that go. So once you get started, hopefully you can get hooked, right? There's only basically a few ways where people can become wealthy. You can start your own business, and then you can sell it at the end and exit. You can get involved in real estate, or you can get involved with stocks. But there's only one where you can do that in your underwear, and that is the stock market. So, so you can't do that in business. You can't do that in real estate. But in the stock market, it's just you and that computer. So, and you can do it anywhere in the world with an internet connection. So it's the most liberating and freeing of all of them. So hopefully you can get involved. All right, guys, take care.
All right, and that's Nainoa Logan, Daniel Kim from Shaka Tech Hawaii, shakatechhi.com. Peace.
All right.